people?
I think from the feedback that I get, because I have Gen Zs and millennials in my own home, I think our products are still not talking to them. Okay. I think there is that sense that we are still not talking to them. And I would say, with this tremendous respect to my industry, which I have really served for over 30 years, the reason I say so is because, fine, I'm now talking about pension. I don't think it's a very nice conversation for like 22, 23, as much as they need it. And that's why I go back to school. If you teach somebody at standard 3, standard 4, there is something called pension. When he's growing, when his mind is grasping things, as he joins the job market, he'll remember his topic in financial planning in standard 3 that we were told, start early. That because the mind was alert. He will remember, she will remember. I was told, start early. There is the power of compounding interest. If I start saving at 22, 23, 24, by the time I'm 40, I actually can stop working and live comfortably. But now you are starting to tell Gen Z at 24, saving. Now he's saying, Chief, I'm not even starting life, right? And you're now telling me to start thinking about retirement, because it's the first time he's getting this conversation. Yes. So I think we need to change the whole narrative, right? And know where do we need to start best. I think it's in our training. We understand the value of money at a very early age. You go to a shopkeeper as a young person with 50 cents and tells you, Mommy, he has a sweetie. So you start knowing there is value between 50 cents and 2 bob. Okay. Because you know, it may be an informal training, but you at least get to know the value of money. When do we start that with insurance? I said past university is when now people will start getting to know about insurances. So I think for me, the conversation needs to really shift, and we look at that. And I will continue saying this, your media must help me until everybody, especially our curriculum people, understands that we cannot grow. The reason why Japan, South Africa you mentioned, are top of their agenda is because these are some of the things that are taught in schools. So you grow knowing the value of saving, putting money aside, saving for to buy your phone, to save, to cover your phone, your car. Some people from Europe, they cannot travel to Africa. In fact, their governments will not allow them to travel without medical cover. It's compulsory. Wherever you get it, but it's compulsory. They cannot even think. Some people, you can even give somebody twice the salary, but perhaps if you don't have the benefits of pension and medical, they will not take that job because they are looking at what will happen when I'll be unable to work. For us, we rush for a job that is giving you XYZ amount without no benefit at all. You can only spend it for so long. When you don't have that job and you didn't save, then what happens?
And these young people, 22, 23, watching us this morning would wonder, yes, I'm not employed. I am actually quite a number of first years are joining this particular week. So they're watching us this morning and they're wondering what kind of insurance. Then I hear you, Mr. Mwangi, but then what kind of insurance should I even be taking? Walk us through, for someone who is not employed, they are in the gig economy, for example, and they are looking to probably, get into, insurance. Where do they start?
I think when you're talking about not employed, I want to imagine that you are saying somebody is not having a formal job, but but is earning. Okay. Now, I think it is good to love yourself. The Bible reminds us, if I preach this morning, love yourself as you love your neighbor as you love yourself. So it has to start with yourself. So one of the things that I really recommend is that it is important that we all have a medical cover. It is so critical. Illness or accidents do not discriminate as to when you can actually be able to fall sick. Fine, as you grow older, perhaps the risk is a little bit more. So a medical cover, therefore, is very important to cater for your costs in the event you go to hospital. Because out of pocket is one of the ways that have been shown that people go broke. Because if then something grows bigger and then you don't have any money, then what happens? You have to sell even the detail that you have. So I think a medical cover is very, very critical. It's also important that they also cover their gadgets. The most valuable assets of most of the economy people is their, let me not just say the phone, it's the whole age of IT gadgets, be it an iPad and laptops and phone and all that they have. It's very, very critical that they insure it. So that some of them are very expensive. They are as costly as a small Vitz. Seen phones of 200, 300, 400,000. Now, if you lose that, now, people may even wonder how much would that cost. For a phone of 400,000 shillings, most likely you pay only 30,000 a year, or even less. And you can even put it together with the rest of your things in the house. So it's actually a very, very, very tiny amount if you compare what you cover. So it is important that you cover yourself. It's also important that you start putting some retro money, that you were saying earlier, some retro money aside for investment. I know people now don't want to hear pension. Then there are things like money market funds, which are also managed by insurance companies. Actually, the major insurance companies today have asset management units within the group. We go to all of them now, they have money market funds where they help you. The beauty with that is that this is well regulated. They are big organizations, so they manage your money well. They have also the reach, so they're able to attract more people, and therefore, if you save 1,000 today, when it hits the insurance company's asset management fund, it's no longer 1,000. It is combined with $1 billion and $1 billion from somewhere else, and it becomes big money. So those are critical issues. The other one that is also important is if as you get into, let's say, family life, it's also good to start thinking of your children. How will they go to school in the event that you are not there, or something ever happens? There is that element of, even if it's necessarily not an education policy, there are education policies that are now linked to also investment. So you need a policy that has both the cover in case anything happens, and also has an element of investment. So as your money is protecting you, your life, then it's also growing in that respect. And we have many, many products in that category where you can both invest, it saves you, and at the same time it's saving you. Fine, you put all your money in money market, it's growing, but unfortunately, today, if you are not able to go to work and earn the same amount of money that you do, for whatever reason that happens, and things do happen, life happens, that's what they say. From where you stopped saving, that is where your money will grow to that extent. But if you had a life cover, you first of all, to waive all the premiums and pay a lump sum. If you are unable, for instance, if you become, for instance, critically ill, disabled, or something, the policy will be able to cover you up to that extent and waive all the premiums and give you all the benefits that as if you have been contributing. So there is a need, therefore, to balance, even as we invest, also the need to ensure that there is savings. Right. There is also cover for our lives, because we have said life will happen.
Life definitely does happen. It's 1:30 the hour. We take a short break. We're asking you, do you consider having insurance as a priority in your financial planning? A number of